Hey guys, it is Mark Coe for the 9th of May. Wanted to follow up yesterday. We were looking at the idea of reversals and what trends start to look like when they come to an end. And I want to take a look at dollar yen today. I want to take a look at dollar yen both from the standpoint of watching it, how it trended, how it reversed, and then how it reversed again as we came into the middle toward the end of April. So let's start here with our late February run up in dollar yen. Dollar yen trades to a high of 115.5 or just under 115.5, then pulls back. So at this stage of the game, what we're looking at a dollar yen that is still strong. It's still well bid. It's held the 111.60s very well supported, and we're back at a very familiar top edge. Right, so remembering what dollar yen was doing was a very familiar top edge back in here in this 115.40. So as we come into March, we get the FOMC, that's March 15th, and dollar yen sells off. It wasn't a strange reaction in the sense that the dollar itself sold off. The FOMC was viewed as more dovish than hawkish, and dollars in general got hit across the board. So that wasn't that strange. But what you started to see was support levels taken out. Levels that the buy side had controlled and had dominated. They were now lost, right? So this first level, 113.70, the day of the FOMC, it's taken out. That level is lost. So sellers win it. Buyers never even are able to come back and challenge it, right? So it becomes, in the short term, it becomes a sell side market. Now the focus comes back to this 111.60, 112 area. It's a very important area, very key area that it held for months. So if it's going to stay buy side market at all, that level should hold. That level comes down, tested, and gives way. Once that level gives way, it is a big flashing green light that momentum, that pressure is contained by the sellers. The buyers have not got the resources to protect that level. So you trade back to it, off. So the point is, you're seeing a new trend develop, and that trend is developing lower. Once these big supports are taken out, there's not much in the way of lower dollar yen pricing. Dollar yen spends a little time around the 110 figure, trades back up, but as you see, it never violates the last breakdown area, this 112.80. It never violates it. So there's still pressure on the downside. Again, we're starting to look for the possibility of buyers stepping in and holding it. They're just not able to do so. And again, lower dollar yen prices, lower dollar, higher yen. Now this is where you see the actual trend start to change, and this is where we're looking at it in real time. We're focusing on bottom edge and saying, okay, first off, buyers need to hold an edge to even have a chance to change the trend. They have to hold an edge. So they hold an edge. Again, in real time, we don't know what it's starting to look like other than buyers are holding an edge. But it's here where the sellers lose a level, right? And it's a gap. It's a French election gap, but buyers get it through a couple levels pretty quickly. So from that point, one test lower and back up, sellers never regain the control. So in looking at this trend that starts in March and trades all the way down to 108.20s, or 108.13 I guess it was, looking at that trend, the beginnings of the reversal start like this. The same way they started up here. It's with levels being lost by the controlling party. In this case, the controlling party was the sell side. Here, towards the third week of April, buyers take out two levels quickly. And then it's a continuation of looking at those zones. So the focus in last night's chart was to look at gold. And what was the potential for gold to form some type of a bottom or potentially a reversal? So we were looking at the potential for it, right? Didn't call it and say it was a reversal because it's not yet. It's not. I said that buyers have to regain 1236 to really reclaim it as a buy zone. Prior to that, all you really had was a bottom edge that was being held. And that bottom edge gave way in early Asia and into Europe last night. So now that gold coming into Tuesday afternoon, gold has made these lows down at 1214. You have the same scenario, which is you can start to look for bottom edge, but bottom edge has to show you that it's there. And it hasn't done that yet. This trend in gold that started just shy of 1290, today at 1215, it's still there, right? So $75 lower in gold. So what we're on the lookout for is two things: a rally that will fail at a resistance zone, or the potential for gold to fail to continue to move lower. That's what we were eyeballing yesterday, but it failed to develop overnight. Now we're back at a new level to, again, assess the same potential opportunity. So this is something that you could see develop throughout Wednesday, Thursday, Friday, or even into next week. But this is the beginnings of it. It's great to be able to look at a chart in hindsight and say, wow, I knew exactly what to do there. But this is how you do it on the hard right edge, right? There's something very different of analyzing it in real time and saying, this is what's developing, right? The potential was there last night. It failed. Now we come and look at the potential again. So we're eyeballing this 1215 to 1218 zone in gold and seeing how that develops. So as we go through with the videos the next couple days, we'll continue to check in on gold and see how our little friend is doing here, our little gold friend, and take it from there. But I wanted to show you that dollar yen chart to get a sense of what those reversals look like and what they can mean when you're getting involved from the beginnings of them, right? It doesn't mean call the top and call the bottom, but what it means is when you see those levels taken out, the buy side or the sell side taken out, it's a first indication that you may be shifting direction. And when those occur at bigger level spots, it makes a lot of sense, doesn't it? I mean, it tends to make a ton of sense when you can look at gold at 1300 and say, hey, there's a shift going on here. Or even prior to gold 1300, the same shift at gold at 1200. It was a big rejection of gold lower into early mid-March as gold got the rise, $90 plus. I think it was over $100 rally. Yeah. So you're talking from under 1200, well, not quite $100 rally, but same deal, right? This looks a lot like the dollar yen downtrend. And how does this develop? First off, gold holds an edge. Secondly, gold begins to take out prior breakdown levels, right? So this was a $40 move to take out that breakdown level right here. But once it took that level out, it never relinquished it. Now how do we look? In a buy-side market, how do we look? Bottom edge action. So this edge wasn't here that day. It developed, and it allowed you to trade it several days later, which was the last $50. That's a $5,000 move in one contract in 2 weeks in gold. It's a big move. So again, that's what we're on the lookout for now. As I'm talking, gold's just sitting right at this 1220 level. So we'll continue to check in on it. So for 9th of May, Mark Coe, bid you all cheers. Talk to you soon.